Today's video title is a massive one to live up to, but I promise you, it will not disappoint. There is facts, data, plenty of evidence to show that it is now impossible for these markets here, the NASDAQ, the S&P, our beloved BTC, to make new cycle lows in this cycle. And another massive thing which I discovered as I was doing the analysis for today's video is this cycle is eerily similar to what happened in 2002 and 2003. And you all know where that market went to in 2007. Stay tuned, hit the like, and subscribe if you haven't already. Let me know in the comment section who you're sharing this with. And thank you once again for all of your comments down below. I really feel like this week has allowed me to expand on how I converse with you guys here on the platform. I love these transitional periods when the best in the business are here in the game, because we know at the peaks, that's when I guess the shit kickers come around. Okay. So the top of the video description is our free TIA trading guide and the free crypto economic report. You can do that. Click that link. This is what you'll be met with. Name, email, get into it right now. It's absolutely free and you can unsubscribe any time you want. And of course, if you're on the email list, you'll get to know when our next trading workshops come out. Like our members are here crushing the markets, 200%, 100%. And this is just from the last time I showed you guys as well. 390%, 250, 350. I mean, the numbers are absolutely incredible. This is just to get us up to speed with where everyone is making their profits. 300%. I mean, that's crazy. Absolutely crazy gains there. 260 and so on. We're up to that. Let's dive into today's video. If you want to be a part of that, like I said, top of the video description, TIA premium membership for those particular gains there as well. All right, this is what the video is about. We're looking at Bitcoin's new highest daily close of 2023, Bitcoin's new highest price for 2023, Bitcoin highest price and closing price in 381 days. That's the most important part that I want to give you for today's video. I've mentioned price and price. This time, I'm talking about time, 381. And most of us should know by now that time is more important than price. That might have been absolutely, that might have been the first time you've heard it as well. But Gann always said time is more important than price. And I want to show you why in today's video, particularly because, well, some analysts, high profile top traders are still trying to call for a collapse. They still think the markets are in complacency and going to collapse, which is holding a lot of people on the sidelines waiting for this collapse. They're saying they're going to be patient and wait, which is absolutely a good thing to have patience in the market, but it's important to understand what cycle we're in. And right now we are not in a bear market cycle that is expecting further collapses. It's just not happening. And of course, like I said, I'm going to show you that data in today's video. What led me to this video here is from one of your comments, actually. Andrew says, you've been following myself and Crown, absolutely great guy as well. Your calls specifically on the broader market have been on point. So the traditional markets, our stock markets, real estate cycles, which is what I focus on here, and of course, Bitcoin and cryptocurrencies. The macros have been spot on. I don't understand how more people don't view the markets the way you do, but each their own. Absolutely fine. Everyone's obviously able to make their own opinions and do their own thing. But I want to show you why most people don't see it and they will never see it, which is our edge. It's our edge at the Investor Accelerator, TIA Premium, and it's your edge now that you're watching the channel. This is why most people don't see what's coming. They say price is repeating, a collapse is imminent. And I'm going to show you what they're talking about when it comes to that price repeating. But what I'm saying, stop, forget about that. Forget the price for a second. The time aspect is far, far, far more important than price. Price, of course, we need it to get profit targets. But in terms of where we're going next, we've got to look at time and time cycles. Of course, I still hear the comments or see the comments that people say cycles aren't important, they get broken, blah, blah, blah. It's just that people typically, and I'm not trying to single myself out here, although it sounds like it, they haven't learned how to use cycles and they haven't learned how to read cycles. So let's look at the price aspect first. Price is repeating, collapse imminent. This was one of the main ones that I have seen pop up time and time again. You may have seen it yourself. And they're trying to say that, well, in this case, the NASDAQ, don't worry, we'll get to BTC and the rest of it. NASDAQ has dropped to the cycle low 38%, call it around 40%. Now it's risen 40 odd percent. It's obviously up 46%. When did this happen last time? Well, let's go back into history. And of course, we've got to point at the most fearful time in the market because, I mean, that's what analysts and media like to do. Look at the drop from the top, 40% down. So similar to what we saw, got a nice little low, spike low there. Then the market rose 43%. So almost an identical move here in terms of price with percentages, of course. And then what happens after that? Well, you get the collapse. And that is what a lot are still fearful of when it comes to the NASDAQ. And of course, if the NASDAQ is going to collapse that much, well, the S&P will have to as well, because the biggest companies in the S&P are, of course, tech companies, which means if tech collapses, S&P will collapse. If those two collapse, you can bet your bottom dollar Bitcoin will collapse as well. And of course, take the rest of the cryptocurrencies with it. I'm trying to explain why that is not the case. Although these prices, in terms of percentages, look exactly the same, 40% and a little higher there at 43. We just saw 38 and 46. So basically on point there. Now they're expecting this collapse, which puts it into this stage of the Wall Street cheat sheet. And of course, I've pointed this out over 3 weeks ago that we are in disbelief, not in complacency. And I also pointed that out many, many months ago. You guys have seen it. They're trying to say that that's where we're at, and then we're going to get this big collapse, which, logically speaking, looks exactly like that. But it's not the right time. The cycle is not correct. They're not reading time. And remember what Gann said, time is more important than price. All they're reading is price. Traders are very good at short-term price movements. They are not so good at macro cycle analysis, which cycles depend on time. So this time, they are not understanding the time. Okay, I've said that multiple times. We're not going to collapse there. Well, why? Why the hell do you keep going on and on about that? Well, look at what just happened. Look at the time frame here. It's only 100 days in terms of a rise from the bottom to the top. Only 100 days. What I'm talking about here is a market finding a low and then rallying in terms of time and then still putting in a new low. That was only 100 days. If we look at what's happened here, and this is the big one that we're going to get to for BTC, but I'm showing you this in terms of history on the NASDAQ and the S&P, that is now 246 days. 246 days. We have had 2.5 times the amount of time going up than what one of the largest bear market rallies in history has occurred, and then saw a lower low. So we've done 2.5 times more time to the upside. This is one of the major reasons why we're not going to see new cycle lows during this cycle for the NASDAQ, for the S&P, for Bitcoin. We are now in a bull market. So let's have a look at that just quickly across some back testing. There is the range, 246. Remember, time is more important than price. Let's get rid of that to the side. If we look at lows, cycle lows to the 246-day move, you can see that every time in history, from 246 days from a low to a top, the market has gone on to make higher highs. Eventually, you'll get a break of a low like it saw here, but that's not the part of the cycle. We're looking at the cycle low, and this low was even higher than that low. So even though we had a pandemic collapse, it was still higher than that low there. So the market rallied 246 days from the low. No new cycle low occurred. There's a cycle low, 246 days. It was at new all-time highs, carried on. These are looking like not major moves, but when you zoom in and at the time, these are huge historic moves, very big moves, new all-time high after new all-time high after new all-time high. Let's take it back again to the GFC low, one of the biggest times in history. There is your low in November of 2008. There's 246 days. Market goes on to make new fresh highs. Remember, that was not the old all-time high. We had a higher one previously, but 246 days from a low, no new low occurs. Let's go back again. I've got it set up here, 246 days. Now this is from the .com crash low to 246 days up. The market did not go on to make a new low. Even in the GFC, the low was higher. Low was higher, okay? 246 days from the .com low. Okay, I think you're getting the point. So that's the NASDAQ. Well, S&P, you probably don't want to see me go through all of the data again because the charts are relatively the same. The S&P, just for clarity, 246 days from the low, 246 days previously, we can eyeball it. There is no time in history that the market has rallied for 246 days from a cycle low and then gone on to make a new low. I'll take it back to the biggest collapse we've seen recently. There's the low, there's 246 days. It was basically the top that happened in June, almost to the day of what's happening right now. And the market did not go on to make a new low. It actually went on to form a mega bull market into a mega double top. Then we had the GFC collapse, and then we went on for another massive bull market for a long time. Now, before I get on to BTC, I want to show you what's happening almost to the day, almost to the exact day. Look at the low in October 2002. Think about what we've just seen. We've seen October 2022, 13th of October 2022. That's the cycle low, okay? Then we saw a significant high low in March. I believe it was around the 13th. And now we are into a peak in June. Look at 2002, 2003. 10th of October, 3 days difference in 20 years. March 12th, 2 days difference in 20 years. So it's 2003 now. Remember 2023, another low. Market moved up, formed a higher low, and then the market took off from that point. Now we didn't take off in that exact straight line, but we've definitely gone up a long way from March 2023. Where did we just peak? 15th, 16th of June. Look at the peak, 17th of June 2003. Look what the market did for the next 2 to 3 months. Went sideways, came down. We had this nice little move to the downside, a little test again, a little downside test, downside, got a slightly lower low, started to come up again, and finally broke out in September. And again in late September, put in another higher low and then broke out again. I'm not saying we're going to follow this exactly, but it's rather uncannily familiar to what happened back exactly 20 years ago. So don't be surprised if you see something similar like this play out on the S&P, because of course, what have we just seen? We've seen the market rally, everyone get excited only on these last few days. You know that we've been talking about a low in October. We're talking about the transitional period from June of 2022, talking about the higher low here. I've been talking so much, I'm talking my head off. Okay, so that's what we're talking about there. So I wouldn't be surprised if this thing consolidates now for the next few months in a range. But of course, the bears are going to get on board, the bulls will get on board, you know, the same sort of thing, rinses and repeats. So we've got to get onto BTC because the video is getting pretty long. I'm saying that I want to say guaranteed. This is what I would talk about with my friends and my members. I'm saying we're guaranteed in the disbelief. But I'm going to put that emphasis on it here because I know this is YouTube videos and not everyone follows along to the T. Understandable. There's a lot of content out there and a lot of time, and especially with me talking. So what I'm saying here is there is that slight possibility that we do collapse further, but I've seen this so many times. I highly doubt that we'll collapse further, and I would say that we're in a disbelief stage, and we are finally cooling off for the S&P and for the NASDAQ. As you can see for the S&P, it's above previous tops, and it's most likely going to be above these previous tops too. That is the data from the chart here, duration of bear market rallies. You can see all the way back in history. 1929 was one of the largest bear market rallies at 148 days, and that would mean that history suggests it would be unprecedented if the market is in a bear market rally. It's likely we have put the low in and we're climbing from that point. That gives us confidence that Bitcoin is going to do the same thing. They are not going to move in the opposite directions. Bitcoin is not going to collapse while the stock markets go up. Not yet, maybe not ever. I don't know, that's too far away. I'm focused on this cycle and I want to make money in this cycle, right? As you should too. Give me a like down below if you want to be making money in this cycle. And of course, subscribe to the channel if you haven't already. As I said, link in the top of the video description here for our free crypto and economic reports. All right, that is a simple chart just to show you all of the bear market rallies over the course of history, significant ones from 1929 to today. This is the largest bear market rally, but of course, this will then not show up once we break through to the new all-time high because it won't be a bear market rally anymore. It just won't be on this chart because it's the start of a bull market. So this will come off the data, okay? once everyone agrees on it. So basically, it's above that. It's not going to happen. This is what I put out today. This is going on to the BTC. Make sure you follow me on Twitter and on Instagram as well. Bitcoin is doing the same thing, right? It's climbing and it's breaking to new fresh highs, as it's just done in the last 24 hours, 31,440. And it is 381 days since a previous price at that level. Now, from the cycle low, 214 days has passed. Remember, time is more important than price. So I said here are two more reasons why it's buy the dip opportunity. Bitcoin has never broken a cycle low after rallying 214 days from a bear market low. Therefore, it's likely that this won't be classed as a bear market rally. It's likely this will not be a bear market rally, and you won't see this data again because it will just be scrapped and it will say that, well, this is the start of a bull market. So you can look back here, there's 214 days from the cycle low, there's 318 days if we take it to the next time that this price was met, $31,444. There it is there, 381. That happened on 7th of June 2022. Take it back to the low, there's 214. So for the back test, you can go back to all of these cycle lows, measure the price up, and you can see that the market has never collapsed to new lower prices. So you have to go into the bear markets and have a look at any of those days that have been rallied. 14 days, and then we got a new low. We had 34 days to the upside, new low came through. 30 days to the upside, new low eventually came through. Go back to the previous cycle, 53 days up in a rally. Eventually, many months later, we got new lows. 39 days up from this point to this point. So we're looking for low prices in the bear market and a bear market rally. Didn't happen. Okay, the last one I got here is 179 days, and then market fell from that point. So we've never done 214 days from a low and then fall into a new low. $15,500 off the cards. Forget about it. Let's have a look at the previous cycle here. 49 days. 49 days, top, didn't come back to a lower low, but we had 49 days here and it made a lower low. Okay, that's basically all the data there. That's all you really need to see. That's why I focus so much on the S&P and NASDAQ, because this analysis works across all markets with a chart, because you can interpret the data, record the statistics, and come to your conclusions from those statistics. That's basically what I'm doing in each of these videos. I highly doubt that Bitcoin will break 15.5. I've pointed out many times before, I doubt Bitcoin's going to break 19.5. And if I want to get things a little bit spicy, get things nice and close to the market so that I can throw my neck out on the line here, my nose out on the line here, I'd say that it's likely we're probably not going to go under $26,000 again. That one, we don't have much breathing room on that. Okay, it's a pretty tight thing to say, but yeah, 15.5 not happening. I'd almost say as well. I mean, I've said 19.5 not going to break in this cycle. So take it for what you will. That gives me now the confidence that anytime I see significant crypto bearish narratives come out, I'm thinking buy the dip opportunity. Get my hands into more of the BTC cake, more of those sats, more of those full BTCs, and get on board with that. That's just based purely on what I'm seeing here. Now, I've got some videos coming up about the altcoin market as well, because it's possible that we're going through this phase C stage of the Wyckoff schematic. Note, this is different to the Bitcoin schematic, okay? The altcoins are taking longer than BTC. Should be a known thing. And I'm going to do an update on this during this week here. Thanks very much, guys. Like and subscribe. I'll see you at the next video. Have a fantastic weekend. If you found some great value from it, let me know. Comments down below. I get back to almost all of them, and I do read every single one. All right, take care. Until the next one, peace out.